There we go. All right. Welcome, guys, to another free webinar for outcomereach.com. Pretty much what we're going to do today is go over a couple basic ideas. We're going to give you a quick run view on intro to smart money, quick run view on Wyckoff schematics. So we're going to do market structure, market cycle, rather than advanced Wyckoff schematics, and a little bit about supply and demand. And we're going to actually start off with a little bit about our company itself. So Outcome Reach was started in September of 2019. Let me actually type it there. There we go. Started in September 2019. Launched our course in January 2020. We have a couple different packages in terms of what our course offers. We have the monthly option for 5 months. So for 5 months, you pay $149 each month, and that gives a total of $750 for our full 18-week undergrad course. We have the second option, which is 2 payments of $300 each. And that is also the 18-week undergrad course, 9 weeks smart money, and then 9 weeks Wyckoff. So let me type that down for y'all. There we go. And then we also have the $1,000 option, which includes undergrad, the whole 18 weeks course, as well as our graduate course. For those that are interested, we actually offer a graduate course after the undergrad course. And what this entails is this allows you to become an admin or an educator within our company. You actually get base salary pay, you get commissions and everything like that. We also offer a referral program similar to what IML does, but not exactly what IML does. So instead of getting a continued payment every week or a continued payment every month based on their signups, you get $50 for every signup that you bring in, and that's about it. So nothing else interesting as far as that goes. So like I said, we have a couple of course options and everything like that. So what we're going to start off with is intro to smart money. So 3 main things we look for in terms of what we're looking for in the market with smart money, as well as 2 other confluences that I look for, with the 5th one not being so necessary lately for my own backtesting. So 1 is what we look for: support and resistance, aka liquidity. Number 2 is order blocks, is the somewhat official name, but we call them outcome candles. In IML, they teach them as sponsored candles. It's all the same thing, pretty much. And then what we look for is INF, or inefficiency. Then afterwards, what we're looking for is for the OC to break liquidity and INF to break liquidity. So we're looking for 2 breaks of liquidity on either side of where the liquidity is. And then we've got number 5, which is 0.768 and then 0.88 fib levels. And this is just going to show premium or discount pricing. So we'll take you guys to an example of a really good entry for, I'm trying to remember a really good entry for, let's see, Bitcoin. Bitcoin is normally pretty good in terms of, there we go. So we had 2 entries here, but the main one I'm looking for is the daily time frame. So let's do a little bit of pushing here. Let's do bar rewind so we can go back a little bit and go here. All right, so quick little lesson on support and resistance. I want you all to write in chat what this right here is. And then I want you all to write in chat what this right here is. A little interactive here. Why this is not market outlook. The only guys that get market outlook are the paid students. This is more just an intro to what smart money Wyckoff is. Liquidity, yes, but I want the retail terminology. What is support? What is resistance? There is no password, Kylan. There shouldn't be a password. That is entirely strange. Hold on real quick. Oh, let me copy and paste this real quick for them. Actually, someone want to, I'm going to paste this in chat and then someone can move it into, there we go. 8VE6FM. So I'm going to paste that into Discord and we'll be good to go. All right, equal highs, equal lows, support and resistance, floor and ceiling. Yeah, y'all both got it right. Everyone got it right. So this is resistance here, and this is support here. Theoretically, based on retail terminology, for resistance, we would sell right here and expect to come down to at least support, right? Remember, y'all got to be active in the chat. I got to kind of figure out what you guys are thinking here. Yep. All right. So normally by retail standards, we would sell at resistance and we would buy at support, right? So we're going to do slow down time a little bit here. So just kind of see what's going on with the market there. All right. So pretty much instantly, we see that both the resistance and the support got ran through entirely. We actually had two levels of support that were ran through right here. So here and here, both support, and we had resistance right here. So this is actually exactly what we're looking for in terms of smart money entries. We have right here as our outcome candle, and we have right here as our inefficiency. That broke liquidity. Both of these areas broke liquidity here. This wick popped up, broke the resistance. This entire candle and wick popped down and broke support. So this shows that banks are in play here, and we want to place a basic trade here. So our entry will be right at this level. Price-wise, that will be 97.81. Our stop loss will be right at the close of the candle, also accounting for spread, at 98.92.48. So we've broken resistance, broken support. Now we're just waiting for price to retest our area and then drop. So what this is called is the $100 analogy. If you give your friend, actually, this is a pretty great analogy for y'all to do. What happens when you guys give your friend a loan of $100? Just in theory, you do expect them to pay you back, right? Yeah, you want that $100 back. Exactly. Right here, this outcome candle is Bank A giving Bank B $100 loan. They're helping them push down liquidity, and that's what they're doing. So now there's a lot of drawdown by the banks in here. There's a lot of liquidity that they need to capture here and mitigate. They're trying to mitigate their drawdown is essentially all they're doing here. So that's a $100 loan. What the banks did here, loaned the other banks $100. Now they're just waiting for it to come back. So let's see. Is it going to come back? Oh, yes, it did. Also, if you notice, we actually had a supply and demand trade here. This was a rally-based rally. So you can enter on that for the buy and then buy into that sell. So we sold right here, and with literally zero drawdown, we got 780 points. And it keeps going too. You can buy back at the supply and demand entry, follow it back up. You got about 3 entries there. And now we're at current price here. So based on overall momentum, we could see a continued bearish momentum here. I do see a possibility to go up to 11,260. That's just what I've been saying for the longest time now. There is a valid outcome candle here. You guys can see here. Resistance broken by outcome candle. What's up, Tyler? And then support broken by the inefficiency below it. Still hasn't mitigated any of the entries there, except for the open, but the 50% because of this weekly time frame is still valid. So I am expecting break of liquidity above, captured resistance at the 11,000 mark, and then drop all the way down to about 2.4 thousand. I've been calling 2.4K for about a year now, actually. You guys can see here, valid outcome candle as well at 50%. So 2,400 range. And then it'll make the full push to 20,000. That's my overall call. Actually, every time frame is valid to spot the candle. I'm going to use a really good example on American Airlines. I'll use 6-month time frame. You can spot one right here. We had support broken by outcome candle. We had resistance broken by inefficiency. Yeah, that was 50% of that one. And then we had our overall entry at the open of this candle at $9 and then popped up. And we actually called this in the private group, and we went from $9, wrote it all the way up to about 22, 23. Some of our students actually took this call. Now it's just kind of retesting, remediating the entries here, but overall could still see it pushed up. So like I said, you can find them on any time frame at all. You can find them on the 1 minute all the way to the yearly time frames. All right, so that was good for that one. So that was basic intro to smart money. We found liquidity, we found our outcome candle, and we found our inefficiency that broke all the liquidity areas. All right, let's go to gold. Is a really good example of Wyckoff schematic structure overall. So what I'm going to do is check monthly time frame, and I want y'all to kind of tell me what you guys see here. Some of y'all know Wyckoff, some of y'all don't, but we're just going to see which of you guys actually know Wyckoff. So what schematic do we see here? Tyler, bro. Grinding my gears here, man. Rosilla, good call. That is accumulation. Alfred, good call. That is definitely accumulation. So what does accumulation mean? What are we expecting in the market to happen? All right, long-term bearish, bullish momentum. So accumulation of orders is a shift from bearish momentum to bullish momentum. You guys can see here, bullish, distribution, bearish momentum, then we had accumulation, now we're pushing up. So the issue that a lot of retail traders have is that they don't understand Wyckoff schematics. They understand teacups, they understand head and shoulders, they understand flags, wedges, etc., but none of them actually tell them what the market is doing. They understand the watered down version of what we're looking for. They would call this a teacup properly. And like, all right, I'm expecting a buy. So they're just going to continue buying, but they don't know why they're going to buy. Or they don't see the structure at all. And they say, okay, gold is obviously overextended. We should sell soon. On the monthly time frame, it's not a sell at all. It just broke liquidity over here. It's going to keep going up long term. We also had a reaccumulation on the weekly schematic that I'm actually going to show you guys as well in this area. So it's helping confirm that long term we are still buying overall. So accumulation just simply means that we're shifting from bearish to bullish. Distribution of orders means we're shifting from bullish to bearish orders. So because retail traders don't know a lot of these terms, they're not going to understand that if they see accumulation, they cannot sell. All right. And so we'll go to the weekly time frame and we'll see the same thing here. This is actually what we call reaccumulation. So this comes after accumulation. It's a reaccumulation of orders, meaning there was a lot of money left back here, a lot of liquidity left down in this area after the initial push up. So banks had to remitigate a lot of their losses and then make the move back up. And on daily time frame, we actually had our entry, supply and demand based entry here. We had what's called a rally base rally. Similar to smart money schematics, it's still an institutional method of trading. And instead of order blocks, you're looking for supply and demand entries. And you guys can see, came down here, opened by the wick, and then shot up almost immediately. All right. So that was the basics of Wyckoff schematics. That was the basics of intro to smart money, a little bit of, let's say, supply and demand as well. So what I like to do is kind of open the floor to your guys' questions. If you guys want to look at charts, if you guys have any questions for me, if you guys have any questions about the course, feel free to talk in chat, and I'll be around for 15, 20 minutes answering your guys' questions. No questions. Yeah, Juanita, I'm telling you, they don't teach this in IML. They really don't. I'm not hating on them. I don't mind people from IML whatsoever. But what we are pretty much doing is giving you guys what IML doesn't offer, is a full non-disclosure, here you go, this is all our information all at once in 18 weeks. And a better price. Yeah, that's true, Wyatt. And it's only for 5 months that you're paying or any of the other options. So time frames that you can find Wyckoff on is every single time frame. You can find on the yearly time frame, you can find on the 1 minute time frame. And what our advanced students actually do is they'll find outcome candles on 1 hour or 4 hour candles. They'll wait for their entries to get near their area, and then they'll watch the 1 minute time frame and then look for the actual price action of accumulation distribution, and then it'll be best observed as our proper entries rather than placing limits. And Barry, the 18-week course is all recorded. It's on our website at outcomereach.info. You can take longer to do finish due to personal commitments, but you have about 3 or 4 videos to watch every week, and most of the videos are like 5 to 10 minutes long, so there's nothing much to worry about. Harry, this is similar to ICT, but we're actually better in terms of what ICT offers. He just kind of rambles and goes on, where we actually give you detailed information. Graduate course includes in-depth 3-month one-on-one courses. We actually give you weekly projects. We give you, we actually make you guys find the signals for the students. We have you guys actually teach the webinars. We have you teach one-on-ones with our newer students to actually test your skills, not only as an educator, but as a trader yourself. Because if you're able to teach other people what you know, that helps build your own understanding of what's going on. For best entry, what best time frame we're using for entry? I personally use 1 minute time frame. It doesn't matter what time frame I find the entry on. Like I can find the entry on monthly, weekly, daily, etc. But I'm going to use lower time frames to get into my entry, because what I'm looking for is accumulation or distribution of orders, which means near a limit order, I can look down onto a lower time frame and find exactly what I'm looking for. Tyler, I'd say a lot of our students are actually finding moves on their own. We actually have a chart discussion group where a lot of I'm actually going to show you guys. So what we're going to do is we're going to go to Discord. I'm not going to show you all the cool stuff, but we're going to pretty much show you guys exactly what students are doing these days. This is our chart analysis program for the undergrad students. And what this is for students to actually send us in their charts, and for administrators and other students to actually comment on their charts and kind of confirm the validity of what they're doing. We actually offer one-on-ones here. This is our discussion group. This is where all the webinars, recordings, and passwords are placed for them. And this is also our PDF channel, where we have all of our PDFs, from homework to free books to, we even do credit card hacks, travel, everything that you guys are looking for. And this will actually show you guys kind of everything that we do as far as away from Forex, because what we want to do is kind of get you guys away from Forex into other things. So we start offering groups about real estate. We start offering courses on side money hustles, such as like paid surveys. I got a free group for drop shipping and survey, Shopify and Amazon FBAs and everything like that for you guys. Good DVD. Personally, supply and demand is pretty much exactly where we go for the course. Wyckoff, Advanced Wyckoff, Advanced S&D, and Advanced Smart Money are only taught in the course. DVD, RBR, and everything like that, we're not really going to go over in any of the free material. It's pretty advanced. So, like one time I went over breakers in the free group, and then just people got so confused. And it's not worth going through all that trouble again. Yeah. D-Shields, there is a graduate course option, but only if you complete the undergrad. So once you complete the 18-week course, you're invited into the graduate course, depending on your final exam grade. So you're giving a midterm and you're giving a final exam, and the final exam is pretty challenging. Like even our admins had trouble with it. And I would recommend focusing on Smart Money first for sure. Smart Money can kind of give you the overall view on what the markets are doing, in terms of where banks are placing trades or their breadcrumbs to find those trades. But then I'd recommend moving into Wyckoff, because what's going to happen is that without Wyckoff, you're going to get a lot of stop loss that sit with Smart Money entries, because you're not going to know where to enter. You'll have smaller stop loss hits, so you're not going to lose 20, 30 pips like retail traders do. You're just going to lose 5, 10, 15 pips at a time. But without Wyckoff, you're not going to understand the overall direction and structure of the market. So with Wyckoff, it'll kind of tell you all that you're looking for, and Smart Money will be your entry. Think of Wyckoff as a roadmap, and then think of Smart Money as the on-ramp to get onto the road. And so what I'm also going to show y'all is the Trade Alerts channel. No, Dylan's method is the exact same thing. We all do Smart Money, we all do Wyckoff, we all do supply and demand in some form or another. And so what this channel is actually our trade alerts. We actually have our own bot. We have our own news alerts channel. We have our brokers and everything like that. And this is actually where we go for setups in terms of what we're looking for with signals. And we do a lot for our students. We have price alerts, we have webinars, we have one-on-one help, we have PDFs for students to go over, we have a full discussion board, we have a quick webinar, which pretty much is whenever Jelfie just kind of feels in the mood, he's gonna just throw a free webinar in the Discord channel just because. All right, you guys got any other questions for me? I'll go over one or two more questions and I'll be done for the day. Inefficiency. So inefficiency is pretty much just what most people call, Harry, we're not going to share today's alerts, bro, unless you want to pay for them. Don't try me like that, man. So inefficiency is the same thing as an impulse. So what we can normally look for here, this would be considered inefficiency or an impulse. Three favorite currency pairs. I focus on USD only. A lot of our students focus on GBPs, Euros, JPYs, CHFs, etc. Instead of focusing on three pairs specifically, such as like gold, oil, or like US30 that a lot of IML heads focus on, like the big paying ones, what I focus on is USD as a whole. If you understand where DXY is going, you can understand where general all of the USD pairs are going. Yeah, we got Tyler. We got access to like hundreds and hundreds. Like in terms of the course, we have about 50 to 60 videos there. And then in terms of the recorded webinars, we just broke 100 webinars since we started in January. Difference between smart money and REIT trading supply and demand zones. Actually, I'll let Jelfrey talk about that one if he wants to. Jelfrey is better with smart money and supply and demand differences than I am. So I'm going to unmute you, bro.
Okay, thank you, Matt. So the difference, actually, I made a YouTube video. So just go to our YouTube channel. I literally said, put the video supply and demand versus support and resistance. And I do speak about the difference between supply and demand and smart money. And there's not much of a difference between the two. What's really the difference is where smart money traders focus on their entry. Supply and demand is the concepts, like the way we understand the market is based off supply and demand. But the method of entry and the way we manage our trades would be either based off of smart money or Wyckoff. But in terms of our comprehension of what's going on in the market, like how can I say, like if this zone is a good area to buy or sell, that's based off of supply and demand. And if you still have questions about that, just throw some questions in the Discord channel. That way I go more into detail. And if anything, we can make a YouTube video if there's further confusion about that.
Yeah, you know, yeah. The YouTube videos, man. It's all free content anyways for them.
Right.
All right. So I believe that should be all for everybody. D-Shields, personally, graduate course is not for everybody. It's for people who want to become admins, people who want to become educators, and people who really just want to better their understanding of the concepts they learned in the undergrad course. I'll actually drop the name of the YouTube channel in the Discord link for everybody. So if you guys are not in the Discord channel, simply message me on Telegram at Matthew Taheri. The link is in the Telegram. If you don't have it, just let me know, and I'll send you guys a Discord link so you guys can get into the free channel there. And then we'll post the YouTube channel right after that into there. So D-Shields again, personally, the 18-week undergrad course is more than enough for a lot of the students. That's all they're really going to need. And then once you finish the undergrad course, you're actually in our private discussion group for life. So you actually will continue getting education outside of the course, outside of the signals, outside of webinars. You're in the discussion group for life. The grad course is going to allow you to pretty much go for everything you need. It's going to teach you how to send signals, how to do one-on-ones, how to do webinars and everything like that for our course, so you can actually start working with us. Or if you don't want to do that, it'll just give you more in-depth 3-month one-on-one things. Undergrad course does not equal half course. Undergrad course is the full 18-week course. Graduate is after you pass the 18-week undergrad course. So it's split into 2 parts, 9 weeks of smart money, 9 weeks of Wyckoff and supply and demand. Half course is just 9 weeks of smart money or 9 weeks of Wyckoff supply and demand. Yeah, that's exactly what it is. So for the 2 payment options, so 300 each payment, it'll be a total of 600 for the full 18 weeks course.